Good afternoon in Europe and good morning in the United States. And if you're still with us, good evening in Asia. My name is Clay Lowry. I'm the Executive Vice President at the Institute of International Finance. We are moving on to have a good discussion with, well, the IMF. And we're very lucky to be joined by First Deputy Managing Director, Geoffrey Okamoto. He's been the first deputy managing director for the past 15 or 16 months, so basically during the pandemic. But before that, he had senior positions at the U.S. Treasury Department. He had also worked on Capitol Hill, both in the Senate side and on the House side, in different senior positions within the finance world. So, Jeff, so representing the IMF, maybe you can talk a little bit about how you see the what's happening in the global economy, maybe a little bit of discussion on vulnerabilities, and particularly, of course, on the discussion on the pandemic itself, COVID. I know the IMF has been working on kind of some of your own policies and own framework on how to think about it. It would be great for us to kind of hear your views. Thank you.
Sure, Clay, and it's great to be here, and for those of you that are tuned in, it was great to be with you, I believe, a little over a year ago in Riyadh, and glad that you're able to convene this virtually alongside the Italian presidency, who's doing a fantastic job leading the G20 through the current environment. When we look at kind of the global economy, we see it largely progressing in line with what we predicted projected in our World Economic Outlook that we released in April. If you recall, that's a 6% annual growth rate. That's the highest growth rate that we've projected in decades, and that it is largely attributed to a few things. One is a very favorable vaccination campaign that is well underway in advanced economies, and then the policy posture of some of the largest economies remaining very supportive. So both on the monetary policy side and on the fiscal policy side, that allows private demand to really strengthen as things reopen. It goes without saying that the U.S. has provided a very large amount of support in the past year, and that has had positive spillovers as well to other countries, and that's captured in our outlook as well. Now, what the 6% figure masks, right, is a pretty substantial divergence that is starting to take place, basically along the lines of who has access to vaccine and who doesn't, and who has policy space to bridge them until they get vaccinated and who doesn't. So there are many emerging market and developing economies that are facing the very real threat of having much deeper scars from this pandemic because they're having to wait so long to begin vaccinating their citizens and thereby reopen their economies fully. So there are huge downside risks to that perspective. As it relates, you probably picked up, this is grounded in where we are at this juncture in the pandemic itself. Because of kind of the macro criticality of the pandemic, we actually had some IMF staff research and work on a proposed plan on how you would go about vaccinating the global population and how you would and what that would cost. The goal would be, under that plan, 40% of people vaccinated in every country by the end of the year, and 60% by the middle of the next year. And so together, actually, with the World Health Organization, the World Bank, and the WTO, we're actually setting up a sort of war room. You can call that basically a task force to coordinate kind of our institutions to be able to make progress in actually implementing that plan. And there are critical steps along the way. One is the G7 commitment last week to commit 1 billion doses, to donate 1 billion doses of vaccine. That will make a material difference. The next process actually is making sure that those vials of pharmaceuticals actually get loaded into a syringe and injected into people's arms. That's a logistical challenge that's actually pretty difficult to undertake, but strong partners in the World Bank and the WHO and in countries are going to help us get there. And really, there's still a strong need on the vaccination front for grant financing, right? I mean, we really, this is something that the research points to, that this calls for grant financing, and we really need governments and both public and private sources to kind of assist with this kind of global campaign.
Okay, no, all right. So that's great. And the Well, and you kind of got into this a little bit, so let me kind of dig a little more on the, you said that there's a masking, so there's positive economic growth, obviously, but there's a bit of a masking of the scars and also probably a little bit of the policy space and ability for different countries. So maybe we can, let's try to think about what are the risks, the asymmetric risks if from developed markets to emerging and frontier markets. If developed markets can continue to push on the policy front, but the emerging markets have to pull back some or dial it back, is that add to this risk? Or does it also create a different risk, which is, we heard a little bit in the last session about debt. Does it create the kind of concern about a rise in sovereign debt type of issues? How do you see that as you're kind of, as you said, kind of disaggregating between just kind of your top line number?
Yeah, I think they're both integrated. Although I think there are some fault lines where they are the causes of, for example, the debt issue well predate the pandemic. For instance, we've called it in the past a pre-existing condition that the pandemic has exacerbated. But if you're an emerging market economy or a low-income country that is looking right now at prospects of vaccination well or far into 2022, absent some kind of global effort to accelerate those prospects, you have a much longer runway that you have to finance in terms of bridging people and firms and avoid the kind of a more permanent scarring that could occur in your economy. So it's a bit ironic, right? Because the economies that have more policy space, right, the ability to issue and reserve currencies, borrow nearly unlimited amounts of money in global capital markets, have a shorter runway, and so they can finance that because they're getting vaccinated earlier. And so certainly that's the case, for example, where I'm situated in the United States. Meanwhile, in many other parts of the world, that runway is a lot longer. That scarring is going to be more severe. And so you see these countries moving into, having to face very tough choices, right? I mean, we've seen emerging markets, for example, move into more unconventional monetary policy measures in this cycle. We've seen low-income countries make very tough choices. One minister told me the choice is between locking down the economy and trying to avoid the spread of COVID-19, or facing food shortages, right? And they can't choose both. So these are very stark contrasts of the reality of the world, and that is why I think we feel that it's not just a moral imperative. I think we all agree on that, but really an economic imperative to make sure that people get vaccinated globally as quickly as possible.
Okay. No, thank you very much. All right. So let's go and talk a little bit about the United States, but also about developed markets, but particularly the United States. So one of the big debates going on right now in the United States is whether or not all the policy stimulus that you mentioned in your opening remarks, and combined with a little bit of delays that we have seen, basically supply chain bottlenecks, is leading to a potential to a rise in inflation. Now, the Fed has come out pretty strongly and pretty unanimously, as far as I can tell, on saying that they believe this is a temporary phenomenon. Others are saying, and some are academics, some are in the markets, who are basically saying that no, there's a little bit more persistence here, and we need to be a little careful. Has the IMF started developing a view on this? How do you see kind of the inflation picture in the United States, but also, because obviously you have a global mandate, how do you see it on a global basis? Because there has been such a demand stimulus, and we are seeing these supply chain bottlenecks.
Yeah, I mean, obviously this is a pretty robust debate happening, not just in the U.S., but really concerns many others, and we can talk a little bit about how that is. But just in terms of the policy posture, I mean, the Fed's models and our models, kind of capture the same thing. So in other words, the data at the moment points to transitory, but that doesn't mean that I personally don't worry about the inflation risks, and quite frankly, it's my job to, right? We're at the IMF. We're supposed to be concerned about what happens if things don't go exactly according to plan. As you mentioned, these are mostly at the moment, I think, related to kind of supply side bottlenecks that are kind of cropping up as people come out of hibernation and begin to interact with the world and see how and try to spin up the activity that needs to accompany that. And I would agree with Jay Powell, right? They had a meeting yesterday that the expectations for inflation still are very well anchored. But I think when you look at kind of where that policy posture is, not to borrow a crypto term, maybe Clay, because you said high conviction. High conviction in the crypto space means diamond hands, right? So you basically see in this scenario the Fed diamond handing, right? Its policy posture and its conviction on its model, or maybe to use another crypto term, it's hodling its model, hodl the model of hold on to dear life. But our job at the IMF is to think about what happens if things don't go as predicted. In the U.S., I think the Federal Reserve has all the tools, we've said this, to be able to contain a rise in inflation if that were to be less than persistent. For us at the IMF, this is an issue for a much broader set of countries. We have 190 members, many of them whose financial conditions are, financing conditions for their own markets and debt are heavily impacted by the Federal Reserve's policy choices. So that is something that we're continuing to monitor and help countries navigate. They've borrowed a lot of money over the past year, those that have, to be able to finance the pandemic. We had a conference actually just a week ago with debt managers talking about the challenges of rolling over all of that debt while these conversations about monetary policy setting are a bit in flux. And I think one thing that we're also thinking about, just to kind of talk to the audience a little bit here, it's actually quite difficult to distinguish in the data between what is a one-off price level change and what is more persistent, right? And if it is more persistent, then you have to think about what if that warrants a reduction in your monetary policy accommodation. If it is persistent, right, this would be persistent because the supply side constraints themselves are more persistent. And I think if you were to see that in the US or in other economies, the way to address that would be to address the supply side constraints through some pro-growth policy measures, right? So in other words, allow the supply side to expand to accommodate the rise in demand. And so I do think that while we're in this period, one, those are always good to do, but two, that is a bit of an insurance policy against downside risks to persistent inflation if it were to come.
Okay. All right. No, that's a good point. All right. So let me, you kind of hit upon this because you said you had a meeting last week with debt managers. The last panel was really about kind of the global debt situation where our chairman, Axel Weber, kind of hosted it. So, the IMF has obviously been involved in the DSSI and in the common framework. I know that you're helping out. I know that that's a G20 initiative where the IMF is providing a lot of technical support. So I wanted to get to some of the criticism. So there is a criticism out there, sometimes it's been labeled by the IMF, that the private sector has not been as involved or has not involved as much as they should be. Well, and then there's also a criticism, sometimes coming from the private sector, that their dialogue between the IMF or the official sector and the private sector is not very robust. So how do you think about it? I mean, how do you, I guess, first make such a dialogue more robust to make sure that all creditors, including private creditors, feel like they are part of trying to figure out how to make this work? But at the same time, and related, I think, is how do you involve the private sector in the way that the IMF has been concerned about going forward? So kind of that's a lot to put in there, but hopefully you can kind of see how the IMF is viewing this issue.
Yeah, so I mean, debt challenges abound, right? Particularly in low-income countries, and again, if financial conditions were to unexpectedly tighten, or inevitably as they tighten, I think more countries will run into these issues as we think through it. When we think about the tools we have for debt, there's DSSI, which is supposed to be a temporary liquidity measure for countries during the initial onset of the pandemic, right? So and then there's common framework, right, which is what do you do about debts that you've determined and are unsustainable, and how do you deal with those? The private sector actually participates. They know how to participate in a debt restructuring under an IMF program. There's engagement with the Paris Club. So that is a mechanism that I think people know how to work through. I think the criticism largely comes, at least to date, right, on DSSI. In other words, the G20 and we ourselves, for example, suspended repayment of credits owed to the official sector. And I think this was well intentioned by the private sector, wanted to do the same, but lacked kind of the mechanisms to organize themselves and creditors to be able to convey that, right? And so I think one thing coming out of this crisis that we need to think about, and part of this is preparation for the next crisis or other kinds of crises, pandemic or not, is there something we need to think about on how we organize private sector creditors and their interaction with the official sector, so that goes more seamlessly next time, and we can get private sector participation in something like a moratorium or a debt suspension, where that kind of liquidity is critical and is in kind of the global economy's interest in a future crisis. On the common framework, we've had 3 countries sign up for the common framework. We've had one get through at least we had a good creditor committee meeting on Chad the other day. I think we've put out a statement on that. So this is a process that is working. It's really, I think of it as kind of the HOV lane for debt restructurings, and it's and look, these are for credits that are unsustainable. They are anchored by an IMF program, and I would really encourage the private sector keep doing what you've always done in the context of these programs, which is restructure credits to kind of meet the financing, the macro framework and financing envelope that we're defining. And we really can get these countries on a growth path that will be in the best interests of everybody.
Okay, and I know that it is something I know that you said in your presentation to the debt managers group on debt transparency, and you even, I think you made a statement that there is evidence, at least, that by being more transparent, it brings down the cost of debt. If that's true, sometimes my concern is that we've all heard about this rhetoric for many years now, from lots of different people. Official sector spokesmen, academics, private sector. But sometimes it's, where is the action? Where's the rubber hit the road? And so are there steps that are being taken to actually kind of meet transparency? We at the IIF are trying hard to come up with a way of getting better private sector creditor transparency, but some of the transparency obviously comes from the borrower, and some of it comes from the official sector. Are there things that can be done or are being done to try to improve upon this, and not just make it a nice talking point that can be made in a variety of speeches?
Yeah, I fully agree. I mean, this is something that's I've placed a high priority on, both in prior roles and in my in my current role. There are there's lots of activity going on in this space. The broad kind of umbrella for this is the IMF World Bank multi-pronged approach to debt transparency. So it's 2 institutions working together, right, to further that objective. And then there's a lot that's buried under that, and then there's a lot going on in other places. For example, the G20 has a creditor self-assessment process that creditors are kind of doing to kind of work through how they disclose. Then there's a reconciliation process, right, where we're reconciling creditor and debtor data. The OECD is building a database to begin capturing and publishing some of this data. And then, certainly there are a litany of IMF, specific policies that require, transparency and disclosure and the rest. Some to us, and then we're over time. We hope that this is accessible more broadly to the public and markets. And by the way, it's for the purpose of efficient capital markets, and I think that does help in kind of the depth and the pricing of the execution of debt being placed by countries. I think it's also, I mean, this is a matter of good government and good governance. Aside from the economics of it, I think citizens really deserve to know what's being contracted in their progeny's name over time, and so we'll continue to work aggressively to move forward on that.
Thanks. And let me turn to a different policy issue, which is related to the low-income countries, not on the debt side, but on potentially providing new financing, which is on SDRs. So I think most of our audience is aware that the special drawing rights, there is a process going on right now. It's not a complete process yet to have an allocation of, I think it's roughly $650 million. I know it's actually in SDRs. That will allocate to reserve banks around the world. Now, the issue, of course, is that there's only so much that can go to low-income countries, and it's not that big in the grand scheme of things, although maybe on a relative basis, it's pretty good. I know there's discussion about doing something to go beyond that, which is kind of an on-lending scheme. There's discussion at the G7. I think there's discussion at the G20. What do you think are the prospects of that initiative? You should probably actually start off with when will this actually allocation probably happen, and then going beyond, is there a chance for kind of a reallocation or an on-lending type of scheme?
Thanks. We've secured the political commitment to move forward on the allocation in the spring. So as you put, $650 billion. That process internally through our governance process is now underway. The goal is to make that allocation in other words, actually transfer the SDRs to member countries in August. So by the end of the summer. And I'll say two things. One, I really don't want people to underestimate the impact of the allocation itself. I mean, as much as there's a big conversation about recycling and channeling, the allocation itself is incredibly impactful. And while low-income countries aren't receiving the lion's share of the SDRs themselves, on a relative basis, they're the ones that are going to find the SDR allocation most useful. And so there's a lot that's being done at the moment through internal guidance and consultation with countries on how to best utilize your SDRs once they're allocated to you. And for many of them, it may actually be holding them in keeping their confidence in markets, especially if we have to ride out a period of financial conditions that are tightening. So that's point number one. Point number two is there are going to be SDRs in the coffers of countries that don't have immediate use for them. They are reserve assets, so they will show up on the balance sheets of advanced economies. But we are looking at mechanisms on how to rechannel those SDRs so they can be used for the benefit of lower income countries. One option that is an existing mechanism that we know how to do, we know there's political support for, is rechanneling those into our facility that extends loans to low income countries. Those loans, by the way, pay for everything from adjustment and support for reform to vaccination and PPE and the rest. So there's a lot that needs to be done to help them, and that's one vehicle. We are exploring other options that range from assisting middle income countries and low income countries in other ways. Those are still kind of under discussion with our board primarily and with major shareholders, those that would contribute SDRs to such a facility. But we want maximum impact from what we're doing this August.
Thanks, Jeff. And so we have one more question, which actually comes from the audience, which is, I think you kind of triggered this with one of your earlier answers when you were talking about digital issues and cyber issues. So it's the idea of central bank digital currency. The IMF, I know your team has been doing some work on this. There's obviously debate about whether or not is this something that is needed, important, what have you. How is the IMF viewing kind of the idea of the future of digital money, and what impact it could potentially have on the international monetary system?
Gr- Great issue and a hot topic. We're actually engaged heavily in a discussion with our board and shareholders at the moment on a digital money strategy. In other words, what solidifying what our role is and how to move out on that work over the coming years. But maybe, I mean, just to kind of paint the picture on why we're here, you know, this environment has just evolved quite rapidly over the past few years. We were talking at one point about stable coins and what the proper regulation is on those. That work is still underway. Now there is discussion of central banks entering into this space with central bank digital currencies, and I think this era of digital money is now upon us, right? And many people are probably using some form of it every day. At the moment, even on this call, right? Whether you're in, and I think really when you step back and think about what that means for the evolution of the international monetary system, right? What that means in terms of macroeconomic management, maintaining the degree of capital account openness, you know, how you conduct the role of the financial sector, right? And banks would play if there were to be central banks issuing digital forms of their money. These have pretty profound implications. And while others are quite rightly focused on payment systems specifically, or the technology, in other words, the algos and the node structure and the rest of how to set this up, really our job, we see, is looking for this broader set of issues of how is the international monetary system going to function, and how are all these CBDCs going to be knitted up and be interoperable with each other, so that commerce can continue to thrive globally. There can be interbank lending globally. Right? When you think about all the different things that are necessary for kind of modern commerce, and the urgency of it is there is a sense of urgency to it, because the number of countries that are now asking us for technical assistance to help them with this journey are piling up, right? And so that's an active discussion on how we will resource to serve them. And then the other aspect of this is the world continues to evolve. So as you know, Bitcoin becomes more popular, and Ethereum, or you know, Diem makes progress in its discussions with regulators to launch its product. That system is beginning to set up globally, and central banks and finance ministries, I think, really need to think about, and we're ready to help them through that, what this is going to mean for them and how they should position themselves so that the system doesn't ossify in a way around them that is suboptimal for their policy objectives.
Well, Geoffrey Okamoto, thank you very much. You've been very kind and generous with your time, and I appreciate you answering a variety of questions, and good luck with all the work that the IMF has on its plate. Please stay tuned, everybody else. Our next discussion is going to be on mobilizing private capital for sustainable development, which is obviously one of the very, very important issues in the global financial system right now, and it'll be moderated by my colleague, Sonia Gibbs. But in the meantime, one more time, thank you very much, Jeff, and take care, and hope everyone stays with us for the rest of our program.